6 decades ago, a bunch of oil-producing countries, including Saudi Arabia, Iran, Iraq, banded together to form OPEC, the Organization of Petroleum Exporting Countries. And that cartel has had a massive influence on American politics ever since. Just look at what happened after OPEC decided to put an embargo on the United States during the Arab-Israeli War of 1973.
This winter, Americans waited in line for gasoline that they sometimes couldn't buy. They conserved fuel and turned off lights. They paid more for oil, food, clothes. Some of them lost their jobs.
Then in 1979, prices at the pump soared again when Iranian oil production dropped after the Iranian Revolution, and OPEC almost tripled oil prices. And of course, the fallout helped knock Jimmy Carter right out of the White House. American presidents have been bedeviled by OPEC ever since, until now. Because to quote former congressional advisor Matt Stoller, Joe Biden just broke OPEC. And he did that through a truly incredible bit of oil market trading. Here's how The Economist describes it. In 2022, when he released 180 million barrels of crude, he sold at an average of $95 a barrel. In July last year, when oil was at $67 a barrel, he began to refill the reserve. He has replaced about 1/5 of what he sold, posting a profit of $582 million, and has managed to time the market to perfection. And Biden's streak is still going. Here to explain it all is Dan Dickert. He's one of the foremost experts on oil and energy markets, founder of the Energy Word newsletter. And back in October 2022, he really called this whole thing in a piece titled, Joe Biden is the greatest oil trader ever. This has gotten very little coverage. I think it's a wild story.
Great.
Take us back to the origins of this.
Right. So 2 years ago, what we had was the most bullish oil market I had seen in 40 years.
Bullish meaning prices are high.
Yeah, prices are and they're going to go higher because what you had is you're coming out of a pandemic. You've got this demand, this pent-up demand. People want to go traveling. They want to get back into the world.
They want to fly. They want to drive.
That means oil prices are going to go up, okay? Now you have oil companies who, during the pandemic, got decimated by the pandemic. They can't cover the oil that's being demanded at the time.
Right.
And to add on top of that, you've got a new war, the Ukrainians and the Russians. And now what the Europeans want to do, and Joe Biden wants to do, is they want to freeze Russian supplies out using sanctions. They want to make sure that the Russians can't use their oil machine to finance the war.
Because their oil machine is the biggest export they have. It's how they finance it.
All of this combined makes for the most bullish market that I ever saw.
Yeah,
so,
and people were going around putting stickers on oil, on gas, and, gas stations saying, with Joe Biden saying, I did
this, right. And we had $5.50 gasoline here. We had $7.50, $8 gasoline in California. Joe Biden goes to Saudi Arabia and does what other presidents do, and he begs the Saudis for oil.
After being very harsh on MBS, who, of course...
Remember the fist bump?
Yes, he gave
photo of the fist bump.
After being very harsh on MBS, rightly, after he had ordered the execution of an American newspaper columnist, various other human rights violations, goes back, does what American presidents do. Hey, buddy, we need the oil.
We need the oil. And MBS tells him to, go stuff yourself, because he's not getting the transactional kind of deal that he got from Trump, who forgot about the Khashoggi murder.
Of course, who's not going to give him a hard time.
Who sold him F-35, fighters. There was this whole transactional deal, and at this point, MBS is saying, "You're going to give me something," and Biden says, "No, I have nothing but the United States to give you." And MBS says, "Forget it." So he goes back home and he hatches this enormously interesting, aggressive plan to use the Strategic Petroleum Reserve, which is our national emergency reserve system, to try and hedge down oil prices.
Okay, I want to be clear here. We're sitting on a bunch of barrels. They actually exist in some cave somewhere.
They do, about 580 some odd million barrels of it.
And the idea is, if we're ever in an emergency in which we don't have any access to oil, this is the strategic reserve.
We used it, for example, in Hurricane Katrina. That was a major time when this stuff was released. But in Katrina, they released maybe 25, 26 million barrels of oil. In this case, over the course of a year, they released 180 million barrels.
No one had ever done anything like this.
Very aggressive. And personally,
basically, because as he's increasing the supply, he's like, oh, you're going to keep supply. You want to keep prices high? Well, guess what? We're going to put a bunch of oil in the market and drive the price down.
Right. And we're
going to sell it into the market.
We're going to sell it into the market. And more than that, we're going to look all the other traders in the eye, and we're going to say to them, if you want to buy oil, The guy standing on the other end of this trade is the U.S. Treasury, the government of the United States. And that scared the bejesus out of every trader, and traders started to drop their own positions in oil. They were helping drive the price of oil down while the government was selling it, because nobody wants to be long oil when the U.S. government is telling the world, telling all the traders, we want to see prices lowered. We're going to do what we need to do to make those prices
so
go lower.
they're coming to the market. They're saying two things. We want this price to go down.
Right.
And we're sitting on these barrels, and we're going to sell until it does go down.
Until it goes down.
Watch.
It's exactly what he did. And so the amount of money he made for the U.S. Treasury, this is the fun part of it, is that he sold basically around $100 a barrel. And he's been buying it back around $70 a barrel. That's $30 that he's made on about 200 million barrels. That's, somewhere between $5-6 billion he's made for the U.S. Treasury. And that's why I said that Joe Biden is the greatest oil trader ever.
You just show this at April 2nd. They were about to do some purchases to replenish the reserve.
Right.
He canceled it. So that's where he was. This is him buying now, not selling, right? You want to sell high, buy low, right?
At this point,
canceled April 2nd, went down, went into the market May 7th when it had dropped $5.
Right. And at this point, he has such there's such a fear from traders of what the U.S. will do next that he merely has to threaten one way or the other to make oil markets move.
But this is a really important thing. This wasn't done before. This is a innovation in using the SPR to basically put a guardrail on global oil prices and to wildly diminish the cartels.
And by the way, I think that Biden understands that as well as being a seller of last resort at the top of a market, he's going to be a buyer of last resort at the bottom of a market, and also protect those oil companies to make sure that they remain profitable as well. The point is that you've got to put guardrails on both sides of this market, and by doing so, you create a lane, for example, for renewables.
For the green transition.
Exactly. You make in fact, if you look at the stock market today and you look at those green market stocks, they've been doing nothing but shooting up, basically because Biden has created a stable oil market for the first time in our history at some of the most crazy moments in the oil market. When you would see nothing like stability, we have seen nothing but stability. It's a tremendous success.
It's really an undercover story, and I think that it does connect to the green transition, because that price volatility is the number one political threat to the green transition, because as soon as things hit $5 a gallon, everyone's like, oh, I don't want this green stuff, right? So that stability is key. Dan Dicker, thank you very much.